Will taxes and insurance be included with my mortgage payment? Hey everyone, this is Cheryl Morrison, your local Chicagoland real estate attorney, and today let's talk about figuring out your mortgage payment. Now this is actually a really important one because depending on what documents you're looking at, you might see two different numbers. So it is really an important thing to do to get a handle on what exactly your payment means and how much and what you have to pay to whom when. When you are buying a house using a mortgage, not only do you have to pay that mortgage, but you also have to have homeowners insurance on the property. Some properties require you to have flood insurance on them. Depending on how much money you're putting down, you might also need to pay private mortgage insurance. And then finally, you have your real estate taxes. So there are a whole bunch of different things that you need to pay, in addition to your mortgage and related to that. In some instances, you might find that most of, if not all of these things are all rolled into your payment, and you'll just be making one payment every month for your mortgage, your homeowner's insurance, your private mortgage insurance, your flood insurance if you have it, and then your taxes. All of that's done. Your mortgage company will be taking the payments for everything other than the mortgage itself, putting it into an escrow account, and then paying out on the schedule that's laid forth for those other items. So your property taxes, it's going to take the money out of the account twice a year to pay your 2 installments of property taxes. Once a year, you'll pay your homeowner's insurance. Once a year, it'll pay your flood insurance. And then if you have private mortgage insurance, the PMI in there as well, that is going to be paid out monthly from that escrow as well. So, that's how that would work. And if you do have your loan set up that way, then yes, your mortgage payment does include your taxes and insurance. Now, it is not necessary in all instances for you to set up your loan this way. You absolutely can choose to set up your loan so that you are responsible yourself for paying your property taxes and your homeowner's insurance. And in that instance, your mortgage payment is just going to be the mortgage itself. And then there will be no escrow, and you will be responsible for paying your homeowner's insurance once a year and your property taxes twice per year. So now if you're doing this, this means that you are not having money automatically set aside so that these things get paid. So it is really important for you to be aware of this and planning for it. Now, perhaps you are setting aside a little bit every month so that you have that money there when you need to make those payments. Perhaps you get a year-end bonus, or you always get a huge sum back for your income taxes, and that's okay to plan on that too. Although certainly, I'm sure you're aware that bonuses aren't guaranteed and neither are tax refunds. So it's a good idea to have a backup plan in that instance. But you absolutely, if you choose to, you can absolutely choose to pay these things on your own, and then your mortgage payment will be a little bit less since it isn't including the escrow for your taxes and insurance. Now, if you are escrowing for your taxes and insurance, it should get paid automatically, but I always tell people that you should absolutely be checking online, the Treasurer's Office website, shortly after the due dates for your taxes to make sure that they were paid. And likewise with your homeowner's insurance, just log in or give your insurance rep a call once per year, shortly after the anniversary of the date that you purchased the home, to make sure that it's paid, because you don't want payments to be sent by your mortgage company and be misapplied and then it look like you haven't made those payments. If that happens, we can of course sort it out, but you want to find out sooner rather than later, because taxes can be sold and have huge consequences for the ownership of your home. And if it looks like your homeowner's insurance has lapsed, then the mortgage company can actually buy it for you. It's called forced placed insurance, and it is astronomically expensive. It is usually 3 or 4 times the premium that you would have yourself if you were to have purchased it yourself. So this is absolutely important to keep track of, regardless of which way you have your payments set up. So I hope that this been helpful. It's a lot to think about. If you need help thinking through these issues, whether or not you should escrow or not escrow, so that your mortgage payment includes or doesn't include your taxes, insurance, definitely reach out to me. That's what I'm here for, and I'm happy to get you hooked up with a loan officer if you need to help you work out the logistics on that end as well. If this has been helpful, do give it a like, share it with anyone else who might benefit from this knowledge, and do subscribe so that you can continue seeing my videos. Thanks everyone, and have a good weekend. Bye.